Fact. The crypto market isn't as simple as it seems. The market is booming. Bitcoin just popped over $108,000 and everyone wants a piece of the action. So, as a beginner in the market, how can you make sure that you come out a winner when it's all said and done? The good news is that most beginners make the same 10 mistakes that end up draining their wallets or making them quit altogether. And if you stick around until the end of this video, I'll show you how to dodge every single one of them. And trust me, chances are you're doing number 9 right now without even realizing it. Welcome back to Cash Lab, guys, the channel where we explore ways to turn technology into profit. I'm Ray, and if you're new here, welcome home. Today we're breaking down the top 10 mistakes beginner investors make in the crypto market and how you can avoid them. But first, a gentle disclaimer. Let's be honest, crypto can be exciting, but it's also unpredictable. While there's potential for big gains, there's just as much risk of losses. That's why it's so important to approach this market wisely and avoid putting in more than you're prepared to lose. I'm not a financial advisor, I'm just a guy on YouTube with a microphone. Whether you're just starting out or considering buying your first Bitcoin, this guide will arm you with the knowledge to avoid all costly pitfalls. So let's dive in. Mistake number 1, lack of business knowledge. Entering the crypto market without foundational knowledge is like setting sail without a map. Many newcomers are enticed by the hype and invest without understanding the underlying technology or market dynamics. This lack of preparation can lead to poor investment choices and vulnerability to scams. In 2021, numerous investors poured money into tokens like Squid Coin, inspired by the popular TV show Squid Games, without researching its legitimacy. Then the project turned out to be a scam and investors lost millions when the token's value plummeted to zero.
So the market cap is $2.168 trillion. And now the market, it went to zero. Damn, there we go, Squid Games. Sayonara, motherfucker. Oh, good Lord.
So how can you avoid making this same mistake? Dedicate time to learning about blockchain technology, different cryptocurrencies, and the mechanics of crypto exchanges. Utilize reputable resources and consider joining a crypto community for shared learning experiences. All right, mistake number 2 is ignoring fees. Overlooking transaction fees in crypto trading is like ignoring termites in a wooden house. They can quietly erode your investment's value over time. Each transaction may incur costs such as network fees, exchange fees, or gas fees, which can accumulate significantly, especially during periods of high network congestion. During the 2021 DeFi boom, Ethereum gas fees skyrocketed, with some users paying over $100 per transaction. Investors making frequent trades without accounting for these fees saw their profits diminish rapidly. So how can you avoid making this mistake? You can use tools like a gas tracker to predict when fees are maximized. You can also use layer 2 blockchains like zk-Sync and Arbitrum instead of the layer 1 Ethereum to make your purchases. There are plenty of videos on YouTube that go into depth on this subject. And lastly, plan your transactions during times of lower network activity to minimize costs. Mistake number 3, short-term thinking. The crypto market is highly volatile, and short-term trading without a solid strategy can lead to significant losses. Many investors bought Bitcoin during its peak in December of 2017, hoping for continued rapid gains. When the market corrected, they panicked and then sold at a loss, missing out when Bitcoin bounced back to all-time highs. So how can you avoid making this mistake? You can adopt a long-term investment strategy, focusing on projects with strong fundamentals. Patience and discipline are the key to weathering market volatility. Number 4, poor security practices. And I cannot stress this one enough, guys. The decentralized nature of crypto means that securing your assets is solely your responsibility. In 2019, the Canadian exchange Quadriga CX collapsed. Users lost access to $190 million worth of crypto assets because the founder, who held the private keys, passed away unexpectedly. An even larger incident occurred when the FTX exchange collapsed due to insolvency issues in 2022. Users of that exchange lost billions. But there is hope, and there are things that you can do to avoid this mistake. 1 is use a hardware wallet for storing any kind of significant amounts of crypto. Number 2, always enable 2-factor authentication and update your passwords regularly. Scammers are coming up with new ways to steal your crypto every day. Mistake number 5 is FOMO buying. Investors Investing based on hype can lead to paying inflated prices and losing money if there's a sharp correction. This hype often stems from announcements by the project itself or an influencer promoting the token. In most cases, this excitement is followed by a market correction, bringing prices back down to reality. The rapid rise of Dogecoin in early 2021, fueled by social media hype, led many to invest at its peak. Subsequent market corrections resulted in significant losses for those who were late to the party. And you can avoid this mistake by conducting thorough research before investing and develop a strategy based on fundamentals rather than market buzz. Research the team, the marketing strategy, and past price structure before entering a trade. And never chase big green candles, guys. Number 6 is an easy one to do, not diversifying your portfolio. Putting all your funds into a single cryptocurrency is like betting your entire fortune on one horse in a race. The crypto market's volatility means that relying on a single asset can lead to substantial losses. Investors who held XRP faced significant losses when the SEC filed a lawsuit against Ripple in December of 2020, causing the token's value to plummet. So how can you avoid making this mistake? By diversifying your portfolio across various cryptocurrencies and sectors to spread risk and increase potential for returns. Again, there are plenty of videos across YouTube that go into depth on this subject. Number 7 is falling for scams and for hype. The crypto space is rife with scams, from Ponzi schemes to fake ICOs. There are countless examples throughout the history of the blockchain, projects scamming users and selling vaporware. If you ever get bored, try searching BitConnect. It'll be worth your time learning how the project scammed millions from its participants. So how can you avoid becoming a victim to a scam? Be skeptical of promises of guaranteed returns. Always verify the legitimacy of projects and avoid investments that lack transparency. A good example is making sure the team is doxed before investing. Crypto projects are typically viewed as more transparent if their founders and team members are verified. Number 8, neglecting tax obligations. Crypto transactions are taxable events, and failure to report them can lead to legal consequences. The IRS has increased scrutiny on crypto transactions, sending warning letters to thousands of investors in 2019 and 2020, reminding them of their obligation. How can you avoid this? By keeping a detailed record of all of your crypto transactions and consult with a tax professional to ensure compliance with local laws. Mistake number 9, and this is one that I have certainly fallen a victim to repeatedly, depending on the market conditions, and that's emotional trading. Making investment decisions based on emotions is like cooking without a recipe. One impulsive choice can ruin the entire dish. Fear and greed are the two biggest culprits, causing many investors to buy high out of FOMO or sell low during market dips in fear that they'll lose everything. Continually repeating this process over time can drain your wallet rapidly. In fact, I would venture to say that this is the #1 offender in wiping out new traders. In May of 2021, Elon Musk tweeted negatively about Bitcoin's environmental impact. The market saw a huge drop. Many panicked and sold their holdings, only to watch the prices recover a few months later. You can avoid this mistake by creating a clear plan. Before you invest, set clear entry and exit points based on research, not emotions. Adopt a trading or investment strategy that works for you. Whether it's dollar cost averaging, holding long-term, or swing trading, then stick to it. Take a step back. When markets are highly volatile, resist the urge to act immediately. Pause and reflect. Sometimes the best decision is to do nothing and wait for clarity. It has never, not a single time, worked out well for me when I panic sold. And last but not least, number 10 is not having an exit strategy. Many investors focus entirely on buying and forget to think about when or how to sell. During the 2021 bull market, many investors rode the wave of Bitcoin's rise to $60,000, but didn't plan for what to do when the market corrected. Without an exit strategy, they held on too long and saw their profits evaporate as Bitcoin dropped back to 30K. And if you haven't checked out our channel introduction video, I was definitely one of those people in 2021. So how can you avoid making this mistake? One is to define clear profit and loss goals. Decide in advance how much you want to make this cycle and stick to it. Number 2 is studying market cycles. Bitcoin and other major cryptocurrencies often follow cyclical patterns, typically aligning with the halving events. Historically, Bitcoin has seen explosive growth, followed by significant corrections after reaching all-time highs. By studying this past cycle, you can better anticipate when the market might be nearing a peak and plan your exits accordingly. And lastly, don't get greedy. Understand that no one can perfectly time the top of the market. It's better to take profits in stages. And if you would like to see a study we did on Bitcoin halving cycles, Click right here. All right, and those were the top 10 mistakes, and trust me, I have made most of them myself when I was first starting out. The good news is that you don't have to learn the hard way. Use this knowledge to avoid the pitfalls and stay ahead of the game. If you enjoyed this video, give us a thumbs up, subscribe, and hit that bell notification. Otherwise, you may never see this channel again. And let me know in the comments which tip you found most useful. And if you would like to see our video on altcoins that we think are going to do well next year, click right here. Thanks for watching, guys.